Today we're talking about the backbone of DeFi, which is liquidity.
I'm Ran, co-founder of Orderly. So we're the exchange layer that unifies liquidity in perps across 18 different blockchains. We've processed almost 150 billion in total volumes since inception. And yesterday we launched a very interesting product called Orderly One that allows anyone to create your own branded perp decks on top of our infrastructure in a span of minutes without any line of code. If you're a creator, community, KOL, you can do this all with no code permissionlessly.
What are the biggest obstacles to provide healthy liquidity in the DeFi space right now?
With AMM models, right, that's the first. It's impermanent loss, right? There's these types of things. But with more advanced liquidity provision, like with now the vaults on perp dexes, it's single asset models and the yields are more stable. So there's less, but then you just have to worry about smart contract risk and such. But I think those are like the next generation types of liquidity provision where you have a more professional market maker that you're essentially giving access to, and there's some sort of a rev share. So I think those are pretty good. We actually have one called OmniVault. It's a 20 million TVL in there, accessible from 3 different chains. Historical APR as of today is 28%, less than 20 basis points of total drawdown in the past 6 months, managed by our partner, Kronos Research. It actually integrates Cefu, so allows quoting on Orderly and hedging on Binance via Cefu Mirror, so it's pretty innovative in that sense.
2020 seemed like the heyday for DeFi. Personally, I used to yield farm, and I was quite involved, and I kind of fizzled out as well. And from my initial poll, the very few people in the audience that raised their hands, it seems like a lot of people have kind of also retracted back. I'm curious to know, are you still seeing the sentiment is strong? How is the appetite with the retail audience right now in DeFi? I mean, if you come to think about it, in American markets, you're getting 5% interest rates, right, on traditional finance. And DeFi holds so many risks. There have been so many hacks and exploits. So how are you finding the retail audience appetite in the DeFi space right now?
It's inevitable that all finance comes on chain. So I think that trajectory is very clear to me, starting with stablecoins, which arguably has the best PMF, right? But you can see RWAs coming on chain, all types of them, not just yield generating, but like stocks and such. So it's just a much better infrastructure to settle, to as a ledger and to trade all types of assets, right? Not just crypto. So that's all happening. So I think one platform that trades everything, even like permissionlessly, is kind of inevitable, and eventually that replaces a lot of the TradFi infrastructure. I think that's so. Then the adoption is, I think it's fast. For example, one of the dexes that built on top of us called Aiden is this actually a big live streamer in Korea called Inbom, and he kind of single-handedly converted a lot of centralized exchange users to DeFi via his dex, because he's got a lot of followers. And it's about the experience, the UX, and just the things that you care about in centralized platforms. I think as DeFi UX gets a lot better, it's kind of a no-brainer, and you can see that with the centralized exchange founders, right? That they're all kind of pivoting to DeFi because this is inevitable. And then by using the blockchain and it's scaling, it's like you're saving a lot on infrastructure costs and people. You have a team like Hyperliquid, 11 people, and they've done so much, right? So I think it's very difficult for CeFi to compete with DeFi at some point, just on the cost levels alone, right?
That's good to know. And I want to get your take on retail audience appetite as well, but I just want to elaborate on a point that you mentioned, Ran. So you said it's inevitable that all finance moves on chain, and I agree, definitely. However, how are we going to balance the regulation that's required from these institutions coming in that will help push this industry forward with innovation and the need for decentralization?
Yeah, I think now is like the best time. You have the US being very pro crypto, pro DeFi, right? So, I mean, I think regulations kind of follow. They tighten up when something bad happens, right? Knock on wood, that hasn't really happened in DeFi yet, but I think now is like the best time to be like a DeFi founder because you can really push the limits on what you can offer, focus on the product and growth instead of worrying too much about regulations, and that'll all come. But I think now and there's various things that people are working on, right? Like like ZK KYC, different ways of compliance with authorities for DeFi protocols. So there's various things that can be done. But I think now is the time to like push hard.
Stablecoins, RWAs, is this going to be the driver for DeFi?
It's definitely, yeah, because that's the majority of TradFi assets if it all comes on chain. Like we're working on getting all types of RWA as collateral. I mean, it's really good as collateral for perps, right? Because it's not correlated to crypto. It's not that volatile. People don't get liquidated as much. And like stocks, bonds, just like how they do it in TradFi, you can use it as collateral for perps, right? That's really good. And then we've got a lot of requests for RWA perpetuals, like single stock, index-based. People want to be able to trade, stocks on leverage 24/7. It's these types of demands that fields, and it's also not correlated to crypto. Like I think the dollar's moving a lot these days, so then FX. So I think everything on one platform to trade on leverage, this is kind of what people want, and use all types of things that you own just as collateral or get yield. I think this is kind of where the demand is.
What is one metric that you think the audience should pay attention to that shows that DeFi liquidity is getting stronger?
Oh, I think for any protocol, like a sign that real users are there is the amount of assets, right? You get for centralized exchanges, DEXs, you trade where you deposit your assets. So I think that's a better metric than something like volumes, because volumes can be faked, they can be wash trading, so it could be misleading. So I think TVL is real, right? So I think that's a pretty good metric.
Thank you very much, our moderator and panelists, for insightful and rich conversation. Thank you.